Hi there, welcome to Kneppy Invest. In today's video, I'm going to be focusing on a company called West African Resources. Now, for full disclosure purposes, I am a shareholder of this company. And one of the reasons I'm a shareholder of West African Resources is because I do think there is a bit of value when it comes to this particular company. The reason I find there is a bit of value here is because of the sovereign risk put towards this company, because they do have operations in Burkina Faso, which, if you don't know by the name of this company, is in West Africa. And because of that sovereign risk, there is a bit of a discount to this company's valuation. For instance, the operational cash flow this company has received over the past year is 350 million. Compare that to the market cap, which is at 1.4 billion. So 4 times operational cash flow, and that's screaming possible really good value. But again, there is that sovereign risk. There are some investors who refuse to invest in these type of companies that have operations in African nations like Burkina Faso. And Burkina Faso actually did go through a coup, attempted coup or successful coup in January this year, and the share price of this company was affected in the short term, but the operations of this company were not affected by that coup. It keeps on rolling and rolling. So sometimes you can find value because of these type of risks. You just got to accept those risks and hope that Burkina Faso or any of these other African nations don't do something absolutely ridiculous. That's a possibility when you are talking about some of these countries. So West African Resources is a gold producer in Burkina Faso, and they've been around for a while, but only been in production for just over a year or so. So West African Resources was founded in 2006 and listed on the ASX in 2010. So they have been around for a while, but really this company has made it over the past year. The CEO and founder of the company is Richard High, 2.2%. And when you look at some of the shareholders of West African Resources, there are some impressive shareholders or funds of this company. Van Eck have 11.8% holding, BlackRock 1.3%, and Sprott 7.7%. The current market cap of West African Resources, I've already mentioned this, is 1.4 billion. That's at a share price of $1.35. And the ticker code for West African Resources is WAF. Now let's have a look at some of the very impressive financials of this company. And this is looking at financial year 21 results. Revenue, 712 million. Operating cash flow, $350 million. So compare that to the market, 1.4 billion. Not only that, if you take into account the cash on hand of this company, the enterprise value is actually lower than 1.4 billion. So this company becomes even more enticing if you look at the cash and the debt on hand. They have very little debt at this point in time. Profit, 189 million. Capital expenditure, 108 million. So companies like this, mining companies, will spend money on capital expenditure. They need to do that. Net debt was 200 million. That's at the end of the financial year 21. That has changed over the past few quarters. EV to operating cash flow, so looking at some of the valuation metrics, EV to operating cash flow 3.4, that's not too stretched, and the PE ratio 7.4, not too stretched. The reason those are quite low is because of that sovereign risk. Nothing to do with the country or the company, or to do with the country they have operations in. Now, before we have a look at West African Resources' most recent March quarter results, we're going to go back 1 year ago just to see how this company has progressed over the past year, really focusing on the debt and the cash on hand. And one of the decisions the management of this company has made, a capital allocation decision, and that's one of the most important things management have to do, is decide what to do with the cash flow coming into the business. And one of the main things this company has decided to do is pay down their debt as quick as possible. So I do like the management of this company because of that decision. And that's another reason I've decided to invest in this company. Receipts for customers in this particular quarter, 1 year ago, was 109 million, and they were operational cash flow positive by 39.3 million. Now, with that cash on hand, or that cash generated in operating cash operations, they decided to repay debt, $17.2 million of debt. They also spent $14.8 million on capital expenditure. And because the amount of money they spent in operating and financing activities was actually larger than the cash flow in operations, cash on hand actually fell from $95 million to $93.9 million. But The debt actually decreased to 226 million. So the net debt at this point in time was only 133 million, which was a far lot lower than it was when they started going in operations about a year before this. Now let's have a look at the most recent quarter, the March quarter results for financial year 22. Very exciting quarter. Probably not as good as quarter as the previous one, the December quarter, but still receipts of customers 145.6. And because they're not spending a lot in repaying their debt, because the cash flow in operations have increased from 1 year ago to 57.3 million, the company is generating a lot of cash flow or free cash flow. In fact, the cash on hand has increased by almost $30 million, and the cash on hand at the end of the quarter finished at $212.3 million. They've also repaid the debt down to really manageable levels. In fact, debt sits at 13.3 million. So that means the net cash in this business is now 200 million. No longer do they have net debt. They are now net cash. They also spent $16.3 million in capital expenditure. You should expect capital expenditure every single quarter. But the main thing here is they're increasing their cash on hand. They also have decreased their debt to really manageable levels. So either what they can do with the cash on hand or the cash generating operations moving forward, either they can provide dividends to their shareholders, maybe a share buyback if they think the shares are undervalued, or they could do some acquisitions to grow the company in the future. So this cash flow in operations and decreasing the debt to really manageable levels gives the management of this company a lot of flexibility moving forward. And the next most important thing management of this company have to decide what to do is, what do we do with this cash on hand? Now let's have a look at the history, receipts history and operating cash flow history of West African Resources from the time they went into production in the middle of 2020. And we have seen receipts steadily grow through time from 86.4 million to 145.6 million. We have seen a little bit of dips in there. And typically, and this is only a sample size of 2, we do see the lowest receipts generally in the March quarter happen in 2021. It's just happened now. We have seen the receipts drop from over 200 million to 145.6 million. But even though receipts have dropped, the company is still highly operating cash flow positive, not quite as much cash flow as the last quarter, the December quarter, down from 138.6 million to 57.3 million. So there might be a bit of seasonality when it comes to West African Resources. I did a little bit of history on Burkina Faso just to see where their wet season is, but it's not the March quarter, it's later in the year. So I'm not sure why there might be a decrease in receipts during the March quarter. There might be some reason behind that. I haven't quite found that yet. If you do know, leave in the comment section of this video. Now to the slide that really excites me, and this is looking at debt and cash from June quarter 2020. So if you go back to the June quarter 2020, the company had $304 million of debt and only $83 million of cash, which means they were net debt of $220 million when they went into production. And you can just see how this company has been focused on decreasing debt. Another reason, I've already mentioned this, why I like the management team of this company. So debt has fallen from 304 million to 13.3 million. Looks like they've stopped paying off that debt because it's really manageable levels. And the other thing is cash on hand has grown steadily through time. It's grown from 83 million to 212 million. So they went to being net cash in the December quarter, and they've continued increasing their cash on hand in the last quarter. So lots of things to like about West African Resources right now. They have net cash, operational cash flow positive by a high amount, free cash flow positive by a high amount. And what they're going to do with that cash on hand, that increasing cash on hand, is probably the next thing I'm interested to see what management decide to do. And if we look at the weekly chart for West African Resources, this is the sort of chart you want to see for any company you own. This goes all the way back to late 2016. Share price really didn't do much for the first 2 or 3 years. In fact, the share price really started taking off around about just after COVID-19 financial panic. The lows during that panic saw the share price of West African Resources get down to about 37.5 cents. But share price right now is in a well-defined uptrend, a really good uptrend line there, that dashed line, slope upwards line. Whenever the share price hits that uptrend line, we do see the share price bounce off it. And right now, that uptrend line is around about $1.12, and the share price of this company is around about $1.35. So share price is still moving up. And if the gold prices move up as well, that could be a double good thing for this company. And I think we will see new highs for West African Resources in the next few months, depending on what happens with gold prices. That's all I have for this video on West African Resources, looking at their March quarter results for financial year 22. A lot of things to like about this company, and that's one of the reasons I've invested in this company. A few things not to like, in particular the sovereign risk. Having operations in Burkina Faso can be a little bit dicey at times, particularly because this company had an attempted or successful coup in January of this year. But that didn't really affect West African Resources operations at all. And this company is highly operating cash flow positive right now. And I think there is some good value. But whether you agree with me, that's up to you. And if you disagree with me, I'd love to hear your opinion on this company. If you think this is the worst investment ever, that's when I really would like to hear from you. So leave that in the comment section if you do disagree with me. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.